All right, everyone, let's grab a seat. I've got Shawn Owen about to come up here. Come on, guys. Back, back, back. All right. Grab a seat. Thank you. All right. So raise your hand if you own cryptocurrency right now. How about this? Raise your hand if you don't own any crypto. Almost no one. All right, you're lying. All right. Okay, you got that. But you own some form of cryptocurrency, correct? Okay, here's the bottom line. What if you could leverage that and borrow against it? So, Mr. Shawn Owen, who's going to be up here in just a moment, he's going to talk about the future of asset-backed debt contracts on the blockchain. So I'll give you a little backgrounder, and then we're going to welcome him. All right. So, Mr. Owen is a serial entrepreneur, experience in management, ownership of enterprise operations, with passion for systems development, business ops, product delivery, and client service. Became involved in blockchain in early 2011, and he frequently speaks and writes on blockchain tech and digital currencies. So why don't you all give Mr. Shawn Owen a big round of applause as he walks up here.
Morning, everybody. It's great to see everybody here in Dallas. It's always exciting anytime I can come to a conference and see such a good turnout. All these new faces, everybody's getting excited about cryptocurrency is always very exciting to me. So I'm very excited to be here. Thank you very much for the time. Looking forward to telling you a bit about what we're doing and how we play into the market. Before I do that, I just want to kind of explain a little bit of a history for you of the name of Salt, what we and how we came to that conclusion of a name and why the brand is what it is, and then I'll get into how the nuts and bolts work, etc. But in the early days, when we first started working on this idea, it was just Bitcoin. There was no blockchain talk. It was a very small market cap of 6 billion, roughly, and there was this really confusing landscape where nobody really knew what Bitcoin was. You'd ask people, you'd talk about it, you'd be trying to explain it to people, they say, Bitcoin, what is that? I don't understand that. Digital money, and it's actually a very deep topic when you get into it. So there was a lot of confusion, and we set out to say, okay, what box is this going to fit in for us with this business venture? Is it going to be a security? Are we going to be dealing with the OCC, SEC, CFTC? Is it a commodity? Is it a payment layer? Is it a settlement layer? What exactly is this going to be viewed at? And we spent a lot of time, a lot of money with lawyers, kind of having that conversation with regulators on how this was going to unfold. And it just didn't fit into any box, and it still doesn't fit into any box because it actually can do a lot of different things. It's programmable money. It's very diverse in what it can do. It's granular, it's fungible. It's got all these different attributes that we've never really been able to experience with money before. So, in looking back in history, there's also some commodity-backed monies that have been used before, seashells, etc. Salt, the table salt that you all like on your steaks, was a form of money. And in fact, early on, the Roman soldiers paid their soldiers, their armies, in bags of salt. It was very easy to determine if it was legitimate or not because you could taste it. It was fungible, it was granular. It was a commodity, and it also preserved wealth. So people would use it to cure meats. They would use it to save wealth, and they would use it to pay and use it as a commodity. So obviously not a great form of money comparatively to what we have today, but we felt that that was very analogous to kind of this new commodity form of money called Bitcoin. And then further on, we kind of started getting into the technology. This realized it was going to evolve into smart contracts, etc. And our smart contract that we're working on started off as secured automated lending terms, which evolved into lending technology as a broader platform. So that's kind of the SALT. The A in the delta is our access, and that ties to our access token, which is the fuel to our system. So I'll spend a little bit of time talking about that, but I just wanted to give a little brief history of the name so it'll stick with you and you'll remember us. Effectively, right underneath that, you see blockchain-backed loans. Blockchain-backed loans could also be thought about as crypto loans or cryptocurrency loans. But effectively, there's these asset class called blockchains, Bitcoin, now Ethereum, and hundreds and thousands, if not more. And we see that exploding into kind of a migration of data, of assets, of the real world onto the blockchain as well. Well, what a blockchain loan is creation of an asset class that is then borrowed against, as you would normally find in any other asset class. So I'll give you some examples. Right now, anybody can go get a mortgage or a line of credit off of a home. You can go to a bank and you can get access to a loan on a car. People do lending off all kinds of crazy things like used equipment, dirt, minerals, you name it. If there's something of value, somebody's figured out how to analyze that value, what the asset class is, and somebody has figured out how to create credit on it. Credit is a very important part of the economics of any market, and it's one of the largest pieces of the market in general, is lending and credit. However, there's $500 billion in value currently, no, $500 billion in value currently in this new asset class, and there is no credit market. So SALT lending is the first official credit market issuing loans against blockchain-backed assets. So for example, simple terms, you have a lot of Bitcoin. Everybody in here raise their hand if they have cryptocurrency. I would imagine you're all probably going to buy a lot more. I see that there's a lot of energy coming into this space. I think our service is going to be applicable and usable for every one of you at some point in time, just simply the fact that this is a growing asset class. It's not going away. And in any asset class, you must have credit. So that's kind of the simple terms. Borrower comes into platform. We have online access through a portal, which you become a member. That's the access that you see on the left-hand side of the screen, SALT membership. We then go through KYC, AML, get to know you, make sure that we want to do business. We don't do credit checks or anything else. We're simply focused on, are you somebody that we want to do business on? Are you on any list, et cetera, like you would find at any other traditional institution. From there, you have an annual subscription that can be increased depending on how much access to the network you need and how large of loans you're going to want. Everything is based off of the collateral. So if you have $1 million in Bitcoin, we can estimate based off of what the lenders will offer you what that will look like. If you have 10 million, 5 million, whatever the number is, 100% of that is based off of the number of collateral that you have, the value of that, what's the liquidity of that asset, and how much can we lend against it. On the other side of the coin, the other side of our network, is lenders. So there's two participants, somebody who has collateral, needs access to cash. I'm going to walk through a bunch of examples, even though all of you are probably that, of some of the big use cases. And then you have the lender, somebody who has excess cash and wants to put it up to gain interest back and help facilitate whatever your needs are. And there's a relationship between the two of those parties that currently doesn't exist in the normal banking infrastructure. So another history lesson for SALT, how it was created, is if you try to go to a bank, which I did several years ago, and you ask for a loan, no matter what you put on your personal financial statement, when they go to validate it, if you've put Bitcoin or cryptocurrency on there, it's very difficult for them to be able to assess that. And that's because of the custodian issues. It's a whole new concept. It's got a lot of bad reputation in the old days as far as being, we're going to replace the banks, it's only for criminals, et cetera. So there's just not a good mechanism for traditional banks to be able to interact with this. SALT is building technology that allows for that gap to be bridged, which is, how do you do custody correctly? How do you properly secure assets in a way that takes advantage of the blockchain, is visible, very transparent and safe, to where a lender can get comfortable with saying, absolutely, I think that's good collateral. We believe it's perfect collateral, if not the best thing we've ever had to collateral based on a lot of the attributes that this new liquid asset class has. But that's pretty much the learning curve that is needed and that gap that exists in the problem that we solve. So current market cap, I touched on earlier, of these assets is rapidly expanding. I think probably everybody in here has made a bit of money or has seen or known somebody who's made a lot of money and seen the value of this emerging market explode. There's no credit market on that number, which is really fascinating when you think about how big that is, and you compare it to every other market where the majority of the transactions happening most of the time are actually lended money. People are spending somebody else's money in most situations, whether it's spending on a credit card, line of credit, mortgaging a home, et cetera. So the liquidity of the markets is dramatically impacted by leverage and liquidity. Currently, our platform has just over 60,000 active members. We have funded it's now to date, around $25 million in loans. We have a bottleneck or pending loan applications of $1.1 billion. That's closer to 1.2 now. So as you can see, there's this giant amount of demand for people who are saying, I believe in this asset class. I believe that I'm going to continue to be long in this asset class, and that I do not want to sell, I want to hodl my crypto. So that number we expect to grow exponentially along with the market cap as we grow, as we can service more loans, as more people get comfortable with the asset class, as some of the volatility starts to wash out, and as you start to see the markets mature, we think credit is going to be a really, really big piece of this market. So another way to think about this is that, I'm going to go back. Another way to think about this is that if you've got assets that you really care about, whether it's fine art, something rare, gold, Bitcoin, homes, titles, you probably want to hold on to that for some period of time, if not for the rest of your life. Yet, on the other hand, you need to spend money constantly, and there's always money that you'd be happy to get rid of. There's a term called Gresham's Law, which basically says that bad money always gets spent faster than good money. And that's very apparent to us in what we see in Bitcoin, which is there's this known quantity of an asset class, lots of people who want to acquire it. Once they do acquire it, they don't want to sell it or spend it. So what do? You end up holding on to it. Maybe you speculate, maybe you trade, et cetera, but typically, there are people in a long position for a long time. Yet, what do people spend? Well, they're not spending cryptocurrencies yet, although we think that's coming. They're spending fiat currencies. So our biggest product right now is just simply access to dollars, euros, some national currency against something like Bitcoin, which we see expanding rapidly into stock market, equities, titles, all kinds of interesting things. If you listen to some of the other talks here, there's medical data, there's rewards points, there's computing power, social media points. There's all this really interesting stuff that can now happen with blockchains and the migration of data. And what I mean by that is that really what you're saying is that we've already been recording titles and assets and property for mankind's history. We've just been doing it in less efficient ways than we are today. Currently, there's silos of data and information everywhere, and you're starting to see people adapt the blockchain technology because it's more efficient, it's this layer of trust, it's really good at recording ownership of what somebody has and securing that ownership. So we see a flood. There's a lot of people doing projects like Polymath, T0. There's a whole bunch of work going into the ability to issue securities in more traditional forms of asset classes. And really the only holdup is the legal ramifications and making sure that we get it right and that we're actually building a better market and a better future for everybody. I'm very confident that that's happening. This year should be a big turning point for that. And as we see that, SALT lending then becomes a place for portfolio lending and or securities-backed lending, things that are more traditional with this entirely new spin on it, which is I can be much more diverse with all of my holdings in a wallet. On the back end, have SALT in my favorite wallet, have access to capital in whatever the bad currency is or whatever the currency is I want to spend, whether it's points, Starbucks, dollars, euros, you name it, while I set up my parameters to say I always want to save Ethereum, I always want to save Bitcoin, maybe I'll liquidate Bitcoin Cash, maybe I'll liquidate Dash, et cetera. And you become able to have a whole entire new way of imagining how you would save money before you spend it and how you'd interact with this in a world where Bitcoin was the first bank in your pocket. We are adding another layer to that, as amongst many other people are as well, which is taking the entire financial industry and putting that in your pocket. So in that paradigm, we imagine that your phone is going to be much more robust in what it can do. Your wallets are going to have many more assets than they do now, and you're going to have more products, ours being one of which, that you're going to have access to. And we're very excited about that. So that's kind of the nuts and bolts of how the product works. It's a platform that allows anybody to come in, whether you're a borrower or lender, and participate in adding value, participating in creation of wealth is what we'd like to say. So I want to tell you something that I'm really excited about now, with leaving some time for questions, which is, we haven't talked about this anywhere else yet, so I'm excited about this. We've funded $2 million from our company into a creation of a foundation. It's a nonprofit. Name will probably slightly change. However, the foundation of what we're doing will not. And we come up against this question a lot, which is, well, is SALT just for people who already have a lot of money? Is it for the whales? Is it only going to be applicable for if I want a large loan and I have lots of millions of dollars? And it's just going to leave out the little guys like everything else in the past. This is no better than the rest, what we had before. And so how do we bridge that last mile? How do we get this into the hands of everybody? And this is something I was passionate about for a long time. I used to always, when somebody would ask me, what is Bitcoin and how do I use it? I pretty much learned really quickly, never bring up mining, don't bring up the Byzantine generals problem, don't talk about any technicality. Just ask them, hey, do you got a phone? Download this app and I'll send you some. And I would always send people about $10. And most of those people now say thank you very much because it's worth a lot more. But I've had this passion of always wanting to just get blockchain out to people. Coming from 2010, where it's kind of a pipe dream to imagine this many people talking about Bitcoin, it's really exciting to imagine a world where everybody's plugged into this layer of trust with all these digital assets participating in an entire new peer-to-peer model. So we're funding the foundation to go to places where people are underserved, underbanked, starting with places that just don't have good information. And here in America, like colleges and high schools, where people don't have value yet. I have a younger sister who just graduated college, and she's being told what everybody else is being told, which is, you need to establish credit, you need to take out a credit card, you need to start creating a credit score, you need to go into debt, you need to take out more student loans, you need to go get another master's, etc. All of which is not what they want to hear, especially in her generation. She's like, I don't want that, I want to save on my debit card, etc. But there's no real financial information. So we're really excited to open up cryptocurrency wallets for people who have, for whatever reason, not been included yet into the financial sphere, whether they just had bad credit, they came from a poor family, they're in a third world, second world country, or whatnot, and say, hey, we're going to give you, from a nonprofit, your first wallet. It's going to be loaded with Bitcoin as an asset class. We're going to then lend the cash with a participant lender who's going to give you the opportunity to pay that back. We're going to teach you the tools of education about good debt and how wealth is created around leveraging an asset into good credit, so it's not always bad debt. Debt has this really bad connotation. And then if you do that, that asset is yours. And we believe this will not only help people start their first wallet, but learn more about economics and how you can leverage that value, and hopefully get them really excited about the ability to save wealth and get more involved, and then spend some cash and pay it back, and then get access to that. So we think that that will help bridge the gap between current situation, whereas it's really not economic for us to do a $100 loan. We're doing average loan sizes of $250,000 on the individual side, or $5 million on the business side. And those are much more profitable for us. It's a lot easier for us to manage that risk. So it doesn't make sense for us yet to get to that mile, but how do we scale this out to what I think a lot of people want to see, which is digital wallets all over the world, the entire world being connected to this layer of trust and this commerce and the society of a market. And how do we do that in a way where we can help? So we plan to make a lot of money. I hope everybody else in here is thinking the same thing. What do you do with that money? We want to be able to give you an avenue to help us fund this type of venture as a nonprofit in a very simple way. So take a percentage of whatever it is that you've made on your lending or have seen an appreciation because of the smart contract and SALT's platform, and then help us funnel this into an environment where we can go out and continue good work of setting up cryptocurrency, somewhat charitable and mostly focused on education. Last thing I want to talk about a little bit here before I get into Q&A is just a couple other things we have going on for SALT in general. This is our landing page. www.saltlending.com, very easy to find. Again, you can find out more about the team, FAQ. We've put a lot of energy into FAQs, so there's a lot to learn there. If you're interested, support tickets. We have a big support team, some of which are in the booth right outside. We'd love to talk to you. We'd like to answer any questions we possibly can and get to know you. But we're really there. We also have careers. We're hiring, so if anybody's interested in what I'm saying, we're looking for talent. We're mostly looking on the development side and or on the financial side. Loan officers, people who have been in finance before who are interested in blockchain now, want to kind of jump on board with a growing company. We have 65 employees, rapidly expanding. We have an office headquartered in Denver's, office opening up in Ireland, office in South Africa, looking at other areas like Australia and Canada. So lots of opportunity if you like what we're talking about here. Then we have the login page, which is where you can create an account, become a borrower, or you can go to the investor tab and check out the opportunity that's coming for the lending side. We're also doing a lot of really interesting stuff there on the opportunity as an investment opportunity for something that I think will be very attractive for people in the blockchain space if you want to participate. I can't talk about it here publicly, but would love to talk about it once you go to the page and sign up. And then the last piece is we have Day for Crypto in Denver. So if you like going to events, you're looking for another conference, March 9th and 10th, we're hosting a very kind of quiet, but yet focused conference. It's not going to be a lot of pitches. There's not going to be a lot going on for ICOs. It's going to be all focused on how do you get started in crypto, how do you do it the right way, how do you take care of security. Got some really great names for people to meet and be in a close area around some industry thought leaders, et cetera. So that's really all I've got. I wanted to leave a few minutes for Q&A and see if anybody's got anything. I see we've got one right here, so fire away.
Yeah, thank you. Love the concept. A two-pronged question. First, you showed $1 billion in demand, 22 million so far that were issued. How do you plan to kind of bridge this gap? And the second part of the question, there were earlier in this conference someone else with a similar concept, and they were talking about a 5 to 7% interest rate on the loans. I've heard figures almost double when I spoke to some on your team. So how are you thinking about the interest rate that you want to offer? Because obviously, if you have a good concept, but the difference in pricing is too big, that's going to be challenging. So
yes, and so I can answer both of those kind of in the same breath. The way we want to solve the demand side is opening up on the investor page. We have a whole other side of the platform. So all of last year and up until now, we've been focused on the borrower experience, the collateral management, the wallet, the custody, how to acquire people into the concept and understanding how to get started, creating membership, et cetera. Now we're pivoting onto the other side of it, obviously based off of demand. We've got way more borrower demand than we have on lenders. We've got a really unique opportunity coming that's a blockchain asset, that's an investment opportunity on the InvestTade, which will allow for many, many more people to participate in the network. That can be as simple as somebody that's an accredited investor here in the States that wants to come into our fund structure and find out information, go through the registered investment advisor, all part of overseen by the SEC, or more interesting, some of the stuff we're doing, which we talked to you privately about, that's going to bring in a massive amount of money. Plus, we're working with some big name banks, which are not quite on board yet, but they're very close. They're very interested in the underwriting process and the ability to take on some of the risk, maybe not all of the risk, but to help funnel money in. And then what comes out of that is a marketplace. So once you have a lot of lenders competing, you get a more efficient market. That's what's going to drive the rates down. We're not going to set the rates. We're going to let the bid ask of the market set the rates. So I don't think there's going to be a problem when it comes to anybody competing against rates. That's pretty typical in the debt markets especially, that they become very efficient. But does that answer the question?
That makes sense. Thank you.
Excellent. Thank you.
From the typical financial model for lending, you have hard assets, whether it be real estate or something, or automobiles, what have you. Y'all are not in that space using those things as collateral, correct?
That's correct. We're not.
You're strictly using coin
That's
or
right.
tokens for the collateral to back. If a person had an asset of that sort, is there any connection whatsoever with using the currency and the asset for the loan?
Well, the connection really is somebody's got to do the heavy lifting of moving the titles and the registration onto a blockchain. There's, like I said, a lot of really great work happening with moving securities into a structure that makes sense with the way that the current regulatory model works. Once that kind of opens up and people get more comfortable with it, instead of everybody doing a SAFT agreement, they're actually issuing registered securities and bonds and titles, et cetera. It kind of opens up the world to titles of real estate, cars, anything else. Anything that you can record on a blockchain. So I see that becoming the first step. We're not trying to tackle that directly. We don't actually want to be in that business. We want to be in the business of once all these assets have been originated or onto databases like blockchains, that then we would be able to put them into the portfolio, do the risk analysis on the liquidity, figure out what somebody will lend against it, and then offer it into the marketplace.
I'm sure you've established a rating process for the currencies that you're willing to take on. Can you give some idea what that is and how the interest rate is determined possibly by the lenders, by you folks? How does that work?
Yeah, absolutely. So what makes a good asset? The first thing that makes a good asset is that you have possession of it, that you can perfect it easily. That becomes very easy in a smart contract where it's put into multi-signature. For anybody that doesn't know what that means, it's effectively the same way of thinking about an escrow account. If you had 4 signers on a bank account, you go to the bank and try to cash it, they're going to say, but there's 4 names on here, we need to see all 4 signatures. In our situation, that's the lender, borrower, platform, and third-party custodian that make up that 4, and you have to have 3 or 4. So that's the first thing you need. You have to have possession of the asset, which blockchain makes very easy. The second way we rate it is that it has to have liquidity. So in a bad day, in a down market, what's the total trading volume? Bitcoin has very large trading volume, so it makes a an excellent option. Some of the other ones don't, but the thing about blockchain technology is that there's this 24/7 market that never closes. You always have some form of liquidity. The higher the liquidity, the more we can offer on the loan to value. But the real thing is if it's volatile, we protect against it as over-collateralization. So we can say, we'll lend against this, but we'll only do 10% loan to value. What that means is that if you have $1 million in the asset, we would lend up to 100,000. If it's a higher liquidity asset, we rate it higher and we say we'll go all the way up to 60%, say. Does that help? Anybody else? The interest rates are determined directly off of the loan to value, so the higher the risk of margin calls, the higher the rate the lender's going to want to demand. And again, it comes back to the market participation from lenders. So if one person says, I'll take loan to values of 60, 16%, and the next guy comes along and says, I'm good with 10%, and I'll go to 70, then all the loans are going to go to the one, and it's going to equilibrate. Everybody, thank you very much. Oh, you got one more here. Yes. So insurance would be great. There's really not insurance in this space yet. I do think it's coming, but I don't know how soon. It's a problem that everybody in the space has, is there's not enough historical data to create interest products. So we make up for that in a couple different ways. We insure against loan to value. We then park secondary capital in the same amount as what we're lending out. We go through a lot of risk analysis. We insure against cybersecurity attacks and other types of data losses. So there's a lot of ways you can kind of protect everybody involved, but there's not an exact interest or insurance product available yet. I hope there is soon, though. So I got 14 seconds. Thank you, everybody, very much. I appreciate the time. Talk to us later. We've got a booth right around the side. We'd love to talk to you.